Hey everyone, I hope you are all doing well and welcome back to another Sunday Sessions video. If you're new to the channel, if you've never seen one of these videos before, it's pretty much where me and Luke, we run through the markets, we show you our analysis that we're looking at, what we're seeing in the markets for the coming trading week, in hope that you can try to capitalize on some of the analysis, as well as take some pointers away, educational wise, to then take over into your own analysis to become a competent trader yourself. So I've got the GBP to USD market up. This is the first one we will go through. Now, I do stick to a handful of markets, so you're more than likely going to see the same few markets every single week, which I actually find is better because it's just going to be updates on what I showed you last week, what's happened since then, and also updates on how I'm looking to tackle the market after what has happened in the prior week. So we were originally bullish in this market. We had a displacement. So this blue box on the left of our screen was a large impulsive wave down, and I was expecting that price was going to be bullish all the way up into this point of interest. However, after we started that bullish run, obviously the displacement confirming the bullish run, I believe that we had an unmitigated position here. We identified that as a point of interest. You see price traded into this region. We got an accumulation, so Wyckoff, a major reversal in the market, and then we identified here a footprint left over within this Wyckoff schematic. I was expecting that after this displacement, we're going to be ready to run this final target, continue the bearishness. However, as you'll see, price did eventually fall through the demand zone, invalidate it, and then continue lower to even break structure and invalidate the entire bullishness that we once had. So if we dive slightly deeper into what's happened in this region, you'll see that around this demand zone, we had a nice level of liquidity built up, identified by this box. And then in my eyes, we have a nice institutional footprint, a nice buy position that goes through all built up liquidity before a major reversal and taking the market lower. So what's happened here is the smart money operators, they've opened a buy position to manipulate liquidity out of the market. And then straight after the liquidity has been manipulated, they've then executed large sell positions to then reverse the market. The reason they've blown price through is A, to manipulate liquidity, and then also get the best possible price to sell from, because if they were to just sell from here, they won't get as much profit as to if they were to open a buy position, push price through, achieving a liquidity grab whilst also selling from a higher position in the market. So because this is a footprint with inefficiencies below, with no price action returning into the zone, I expect that this needs to be mitigated. As a result, we're going to set an alert here at 1.31286. And now I have that alert set, I'm quite simply going to be waiting to see if price wants to run back up. Another sign that price may do this is another area of liquidity in the market just here. So it'd be nice to see price run through, clear this liquidity, mitigate the supply zone, and then hopefully capitalize on a sell position lower. Now we're going to go on over to the Australian dollar to the US dollar market. Ignore all the writing on the right hand side of your screen. We'll get into that in a second. The main thing we want to focus on is the structure. That's the first thing we want to do. So we are in a higher time frame bearish structure. What's happened is that this was a protected high. This was the impulsive wave down. This was the last buy to sell. Price has traded back up into the last buy to sell, mitigated the position, distributed, and then since then we can expect price to continue running lower and actually exceed the final target here to continue the bearishness. Now the fact that price reversed in this zone and protected the high is confirmation to me that price should actually continue trading down lower. So we take that bias with us as we dive in. This is the first impulsive wave down within the higher time frame scheme of this bearishness. So we have the first impulsive wave down. We leave two unmitigated positions. We invalidate the first, tap into the second. And as you will see here, after we've tapped into this second zone or the higher zone, we've had early signs of a distribution. We have phase A here, a lot of liquidity creation. Straight after that, you see we have this large high volume push up through the area of liquidity. Now, to me, this is definitely an institutional footprint, an institutional candle. Now, what we're expecting is that after this displacement has been delivered, we want to see price trade back up, mitigate this institutional candle, where we should then create a last point of supply in the scheme of a distribution before a reversal and another move lower. So if we can try to capitalize on a sell position, I'm going to set an alert here at 0.7536. And all we're going to do is we're going to be patient, wait until that alert's set, and then look for sell positions. Okay, so now moving on to the Bitcoin market, so the Bitcoin to the US dollar. What I'm seeing here is that we've had a recent displacement, a recent break of structure. After that, I'm then going to assume that we have early confirmation of bearishness, disregarding the once bullish trend. So once this happened, I took this as an impulsive wave lower. We looked inside of that impulsive wave. We found an unmitigated supply zone. We highlighted it. Price traded us into this. And then once we traded in, we reversed through a distribution. And what I quite like about this distribution is this region here. You'll see we have inducement and momentum. So what that is that we've had a big area of liquidity build up here, some rejection to this region. But then straight after that, evident by the wick, we've had a large push up. Straight after, the smart money operators have executed sell positions, which has then reversed the market lower with some market inefficiency. So we'll now be looking for this as a supply zone, hoping to see price trade back up, mitigate this position before continuing lower. So in this market, we're going to have an alert set at around 46,541. So the last few markets we've analyzed have all been sellers markets, so pretty much waiting for the alert to ping if or when it does, then looking for lower time frame fractal displacements, also known as distributions, liquidity clearances, whatever you want to know them as. I'm pretty much just looking for sell positions on these markets. We've analyzed the structure, which I do off camera just as it's easier, and then once I've done that, I give you my quick bias, show you where I'm looking to sell in these markets, and then give you an idea of how we want to enter. Now finally, I just want to run over the gold market, so XAU to USD. Now what I'm seeing here, just on this side of the screen, is bearishness in the market. We've had an impulsive wave lower, correction wave, impulsive wave, which breaks this low, so sets a lower low. We then come up and we set a lower high, which to me is where I've got this region, high set. And then after we set that high, we have the displacement of what should have been a protected low. From there, I took this as a supply zone, so the last buy to sell. You'll see price recently tapped in. So my assumption from here is that price is going to continue bearish, going to continue this move that we're currently looking at, evident by the fact we also broke the low, so we put in a lower low here. After doing so, I thought, right, we should tap into this supply zone before continuing the bearishness. Now, the reason that I like the idea of this bias is because we had some more inducement and momentum. An area of liquidity has been built up, so we know that there's definitely supply in the market at this region. The only way we could push price up through the market like this is through institutional control. So to me, this is an institutional footprint which needed mitigating. I was hoping to try and find a sell position from this zone. However, as you see, price has recently disregarded, broke what should have been a protected high. Now, as a result of that, I may now look for intermediary buy positions, especially from this demand zone. However, because we have recently disregarded our overall bias, we may want to give price time to play out until something more solid comes along, and then look to execute position. This for me is just part of risk management, not looking to overtrade a market if it's not giving you a clear bias. Regardless, that is going to conclude my section. I will now pass you over to Luke, who's going to go through some of his own markets, some of his own analysis. So I hope you enjoy that.
Thank you very much, James, for your analysis. Now we're moving over to my analysis. Today I'm going to go through Great British Pound to the US dollar, XAU to the US dollar, and then we'll have a look at some of the Japanese yen pairs as well. So on screen at the moment, we do have the Great British Pound to the USD here. As we can see, price has formed clear bearish structure throughout. Ever since the 31st of May 2021, we have since seen a change in previous bullish structure, now moving to clear bearish structure. Why? Well, because we have had lower highs and lower lows set in the market. This is on the higher time frame structure. We are currently looking at the 1 day time frame, so this is brilliant as this gives us our overall bias. Because we are seeing bearish structure being put into the market on such high time frames, we know that that is going to be very much respected, and due to this we want to take advantage of the current structure. So that means we want to be a seller in this market rather than a buyer. Now, it doesn't mean to say that we can't buy into the Great British Pound to the USD. We can take full advantage of the retracements, buying into those when they do occur. We are about to see a retracement, I believe, just due to my analysis. I'm going to go into it in just a moment. But yeah, just to reiterate, we obviously have a high set, a low set. We then have a lower high. a lower low, followed by another lower high. And as we can see, this has continued throughout. This here marks the major swing high on the 1 day time frame. And if we look just a little bit lower, we have a structural low set here in the market. So through this bearish trend, we can expect price to come as low as this point, even if the 1 week time frame structure is actually bullish. We can expect that this could just be a huge bearish retracement on the 1 week time frame before taking its next impulsive wave up, in which case we can expect price to come as low as this point, and we would be safe to place our sell positions and having to take profit somewhere around this area. So this could be our final take profit target. If price breaks below, retests, and continues to move lower down, then we can look to continue to sell into the market. However, if price comes around this zone or this area, shows rejection, starts setting in bullish structure, then that could be a good indication that the 1 week time frame is delivering its next impulsive bullish wave. Now, going back to our analysis, we are sellers currently. We want to be looking for those sell positions. We always trade with the trend and not against it. So how do we know that bearishness has been confirmed and is continuing lower down? Well, we have just recently seen confirmation of a continuation in bearishness. Why? Well, we had a low set here after breaking a previous low. We've had price come down to set a new lower low. Price has come up to set a high, and we have just recently seen price break this previous low. So this is now the protected high within this point, because this was the swing high that then went on to set a swing low that was lower. So we can now mark this as a protected high. Price realistically shouldn't come to break this, as this is, bearish structure, following structural laws. We shouldn't see price break above that. If so, then we would know that price is now looking to move bullish, and we'd be looking for those buy positions. Again, nevertheless, we go down on timeframes, we'll see this break in structure, or this continued bearishness, a little bit more clearly. We have seen the break here. Price is now, I believe, coming back up to retest. Now this retest, realistically, if we just highlight this, bear with me 1 second. Price realistically now could trail up all the way up somewhere around here before then taking its next move down and breaking this low once again. What we would be looking for realistically is for areas that are yet to be mitigated, any unmitigated areas, or we could use the Fibonacci, so marking our swing high to our swing low, so A to B. This then gives us our golden ratios. With this, we could get our rectangle tool, highlight these 3 golden ratios. So we have the 38.2, the 50, and the 61.8. This is great. Let me just get rid of that. So we know we can highlight this. This is the fib box. I always do this. This just gives me a rough area at which price could come back up to retest, show signs of displacement, a distribution, and then go on to set that new bearish structure. So if price was to follow the Fibonacci and was to react well to this, we can expect price to do something like this. So price would come up, continuing to set bullish structure during its retest. If it taps into the 50, it might come back down. It will then go on to produce a lower high. This is our first piece of confirmation that price is looking to reverse, showing signs of bearishness. It would then break the previous low that it's set. This would then be our confirmation that bearishness is underway. As in bullish structure, the highs get broken and the lows don't. Price would then come back up to continue and set another lower high, and then we can expect price to then go on and set bearish structure, in which case we would wait for displacement by looking at a lower high being set first and foremost, and then we would want to see a break in a structural low. Once we have that, we'll wait for price to then retest once again and then get in on the end of the retracement, which would be somewhere around here, and then we can ride that impulse down. Now, again, I don't like to trade against the trend. So me placing a buy position now would be going against, one of the rules that I stand by. But if it isn't a rule that applies to you, you could definitely look at placing a buy position and having an area or a parameter set like this, and then look to take a close once you see, structure failing to produce bullishness. We could look at taking a close at that point, but this would be a good area as a rule of thumb and to look out for. But yeah, coming on the open, we could look at placing those buy positions. So we would realistically want our stop loss below a structural low. So we just get our position. This is just to show you guys an example of what we could place. Coming Monday, we could have our stop loss below this structural low here. We could have our take profit, say at the 50. And right now we have just under a 1 to 2 risk to reward ratio. So if you're risking 2%, you're looking at just under 4% returns from this position. Again, it's not really ideal for my trading style. And realistically, I want to be looking at higher risk to reward returns. So it might be something that I might skip. I will, however, put out the analysis on Monday for the guys in the VIP chat, as well as our Learning Lounge group chat. So if you're not involved in that, make sure you get involved. We have loads of content in there, and we post all of our analysis and anything that we're looking to capitalize on in those group chats, just to help you guys make some money along the way. If you did want to capitalize on a position and you didn't want to just enter in as soon as we opened, because this example here was an example of just entering in as soon as the open comes Sunday. You could just place a buy position straight off the bat, have your stop loss below this structural low here, and wait for price to continue riding up. Now, this doesn't give us a brilliant risk to reward return. So what we could do realistically is go down to the lower time frames ever so slightly, wait for some kind of retracement. So for some kind of pullback, as we've seen here, we've had a pullback, price has come up, set a low here. Again, it's come up to set a higher high. We could say that this is now setting a higher low. If price continues to come down, it shouldn't break this low here. So price could come down as soon as we have confirmation of new bullish structure being put in. So its next impulse to take place, breaking this high, then going on to continue to set that bullish structure. We could look to get in somewhere around here. Realistically, it might be somewhere around here, just because we need to wait for further confirmation. Then once we jump in on the market, where would we place our stop loss? Say that we do enter here, we could place our stop loss below this low that it produced. I would take profit at the 50 again, and as you can see, we have much better returns, giving us a 1 to 10 risk to reward ratio. Risking 2%, you're looking at a 20% return from this position. So this is just ways of refining your positions and your trades, looking at the lower time frame structure and using it and taking advantage of that. So just to summarize, on the Great British Pound to the US dollar, I am biased to sell. I am looking to sell into this market longer term. But, however, we can expect a retracement to take place. Look at those fractal structural points and get in on those buy positions, and just be wary of price reversing in and around this area before it's going on to take that big next impulse down for the higher time frame structure. Now moving over to XAU USD. So this is the gold market. This is one of the favorites. I've always traded this market for the past 5-6 years. I'm really looking to capitalize on a short position. So again, I'm biased to sell. I believe that the market is going to be moving bearish, and has, as of recent, been moving bearish. We have recently taken advantage of a bearish position. So I believe we are going to see a tap into this point. So this is my predictions on what I believe price is going to do. So come into this, clear all liquidity here, and then go on to set that bearishness. As soon as we have confirmation of bearishness being delivered, a break in this current bullish structure, I will be looking at taking full advantage of a bearish swing. Now, we did capitalize on a 200 pip swing here. That was great. And we capitalized on another 200 pip swing here during this bullish retracement. So we have actually capitalized quite well on XAU USD as of recent. So yeah, I mean, I'd like to see price move bearish. As I've suggested, we would look at fractal time frames. So going down time frames, waiting for that displacement, waiting for breaks of structure, breaks of this bullish retracement, and then jump in on those sell positions. Okay, so finally moving over to the Euro Japanese Yen. As we can see on screen, we are looking at the 1 week time frame. So we have marked out the 1 week swing high here, the 1 week swing low here. So these are major points in the market. Price has since been ranging in between. Now, price has been moving bullish. And as of recently, if we have a look here, we just highlight this point. Price has actually come to tap this previous high. Now, if we look a bit more closely, so we could say that this high has actually been broken. So this could be the confirmation we needed for a continuation in bullishness. Now, if that's the case, then we can expect, obviously this is a retracement. This whole thing here is a retracement. Now within this, there has been many impulses and retests fractally. So we could have taken place in many sell opportunities and buy opportunities. Obviously your sell opportunities are more important in this regard because the market is moving bearish. So we want to take advantage of those sell positions. Here, price has again produced many opportunities to both buy and sell, giving us clear points of impulses and retracements. But here, as this is the bullish impulse, the most effective trades would have been those buy positions. But now that we've had that tap and that break of this level, or at least that tap into that point, I truly believe, well, it would be interesting to see. I mean, I believe price will come and break lower. I could be wrong. So in the coming days, I think it would be extremely important to now see how price plays out. If we see bearishness being put into the market, that would tell us that price has rejected this area, in which case we would look to obviously place our sell positions, and we could ride this down on the 1 day time frame and really take advantage of a huge opportunity and a huge move in the market. Again, I do believe price is going to come down, produce a further retracement. We could say that this was a protected low, so price shouldn't come down to break this point, and then we can expect bullish structure to be put in and hopefully come to break this high. This would confirm bullishness on the day time frame and this structure within itself, but it would also confirm bullishness on the 1 week time frame, which is major, in which case we can expect some real large moves, and we would look to take full advantage of those. So yeah, Euro Japanese Yen, I don't really have some major analysis for it. I'm going to be completely honest. I think it's just a case of sitting and waiting, sitting on our hands, being patient, waiting to see exactly how price plays out. But usually when big structural points like this get broken, we can expect a relatively big retracement, in which case we would be looking for those sell positions anyways. But yeah, I think it's important just to keep an eye out and see how price plays out. But as soon as we have confirmation of either direction, I will be looking to take full advantage of those moves. Now, that does come to the end of my analysis. Again, it's been quite brief. We've gone over the Great British Pound USD, the XAU USD, and we've gone over the Euro Japanese Yen. Now, if you have enjoyed the video, please leave it a thumbs up. All the support is much appreciated. If you have any feedback on the video itself, our analysis, or how we've done things, by all means, drop a comment below. We'd be more than happy to read through them and make sure we reply to you. And if you haven't joined the Learning Lounge group chat already, I definitely recommend you do so, as we give out free tips all the time, loads of offers, and it's also a place where like-minded individuals like ourselves can go and basically refine their strategies and become more competent in the world of Forex. I think it's very important to find people that are realistic and are transparent in this industry. I think there is a lot of misleading information out there, and there are a lot of people out there that presume they know what they're doing, when in actual fact they don't, and they're giving out the wrong information. Now, by no means am I, a master at the financial markets, but me and James have many years of experience within this field, and we take pride in the work that we produce. We aim for 30% a month. Now, last week we were actually quite busy in terms of inside business, so we didn't trade too much. But the week before, where we were trading throughout the entire week, we placed trades pretty much every single day. We actually came out with a 26% week. I'll put a post up on screen now of our results. This was a brilliant week for us. Not every week is as good as this, but this is just an example of some of the content that we produce and the quality of content that we produce. Now, again, I hope you've enjoyed the video. What I want you guys to do, if you don't mind, is leave some recommendations of some Learn to Trade videos that we can produce for you guys. We've gone over a lot of the basics. If you haven't seen them already, go check them out. But if there's anything that you are unsure about, if there's anything you want me or James to run over, please drop them in the comments below, and we'll be sure to create that content for you. Again, thank you very much, and we'll see you on the next Sunday Sessions video.